Let's focus on home sales data this week as the year wraps up for 2025. I'm interested in understanding the likelihood that sales volume climbs out of the basement in 2026. Are there any signals in the data now that help us discern the future? Mortgage interest rates are in the low sixes now compared to the low sevens a year ago. How much does that matter for Q1 transaction volume? NAR released their latest existing home sales data last week, with November coming in at an annual rate of 4.13 million. The total sales for November came in below last year by their count, even as the annualized pace is inching higher from earlier in the year. NAR's data follows similar patterns as the weekly pending data that we track here. We're looking at slow sales growth from very low levels. I expect that growth to continue in 2026, and I'll share some reasons why today. We'll cover the rest of the inventory and the price data too. Let's dive in to the data. So this week's pending home sales came in at 47,000 single-family homes plus another 9,000 condos. It's the end of the year, of course, so these are seasonal lows. We have 2 more weeks of the lowest of the year before the spring season starts. In the real-time data, the weekly pending sales in December actually have been a little disappointing. Recent weeks have been coming at basically the same levels as last year after spending most of the last few months with pending sales above last year. Last week and this week actually counted fewer pending sales than the same weeks in 2024. So the recent trend in the weekly pending sales is just barely above last year. So it's hard to know if this is just noise, in the data during the holiday season, or whether it's a trend to pay attention to. In this chart, the blue line is 2025, measuring the weekly pending home sales. The blue line has been above 2024's purple line for several months. But recently, it has dipped back down to the same level as last year. The December weekly average has been 48,000 single-family homes going into contract. About the third week of January, we'll see the seasonal spring inflection point. I anticipate that if mortgage rates stay lower where they are compared to last year, it will shake some buyers off the fence. And so that's my speculation, and we'll keep watching the data. In our 2026 Market Outlook report, we've included this illustration of how home sales change over time. In this chart, each bar is a year's change in existing home sales. This is from NAR, existing home sales data over the last 20 years. Notice that the slowdowns happen steeper and deeper than the growth years. The biggest down years are 20 or 25% fewer sales than the year before. The biggest up years in the past 2 decades have been around 10% growth. The housing market sees modest unit volume growth pretty consistently, punctuated by big downturns, specifically in the bubble and again after 2022. At the right end of the chart, you can see where we're expecting modest growth in 26, about 4% unit volume growth. Mortgage rates are 75 basis points lower now than last year at this time. Then rates were headed higher too. So that made for a really slow start to 2025. Financing conditions are definitely better now. Prices in many markets are better now than they were last year. Supply is 13% greater. So conditions overall have improved for potential home buyers. All of these things point to some sales volume growth in 2026. The negative pull for home sales includes a weaker job market, people worried about their jobs don't buy houses, and potentially a deflationary mindset where buyers try to time the market and wait for prices to fall further. While I think the balance of the data is in favor of slight growth in sales volume, it also seems obvious that these conditions are fragile and could get derailed by any number of macroeconomic factors. So on the other hand, what if we get lucky in 2026 and these macro factors conspire to improve conditions a lot for home buyers? So in this chart, we've illustrated the potential for a big up year. We call this the Goldilocks scenario. If we get steep declines in mortgage rates early in the year and the job market doesn't crater, and we also have slightly more inventory in places like Chicago and New York, that could lead to a bigger growth year for home sales. So this history chart shows us why greater than 10% is very unlikely, but it is possible that we could get growth if we get lucky with several variables. So I think that's worth considering both of these scenarios for 2026. Small gains are most likely. There's another variable that implies sales growth for 2026, and that's the MBA's Purchase Applications Index. In this data, mortgage lenders report the number of applications for mortgages to buy a house. When you want to buy a house, you apply for a mortgage. In 2025, this data has been consistently improving over the last year. In this chart, I have the 13-week rolling average of the index, so each line is a year. The blue line for 2025 has been steadily increasing over last year's purple line. As of this week, the recent pace for mortgage demand is at its highest it's been since 2022. The blue line is quite clearly aiming higher. Mortgage applications by this measure have been running 10 to 20% more than a year ago, but home sales are only up 1%. So 20% more mortgage apps, 1% more sales. This data says to me that there are potential home buyers waiting for conditions to improve. They haven't pulled the trigger yet. The levels here are still very low, of course, so this is not about popping the champagne, but I think it is notable moment in the data, and it is one thing that bodes well for home sales in 2026. Let's look at inventory now and for 2026. The supply of homes on the market now is 13.5% greater than last year at this time. There are 757,000 single-family homes on the market. That growth rate continues to compress, so we expect next year to have 10% inventory growth over 25, down from 30% earlier this year. In this view, each line is a year. The purple line is our week-by-week forecast for inventory in the next year. You can see the normal seasonal curve with a peak around 1 million homes on the market in midsummer. One wild card with the supply of homes is whether we start to get any inventory growth in the Midwest and Northeast. Everyone knows that there's lots of homes for sale in Texas and Florida, but will Chicago and New York finally get some supply? I believe that tight inventory in these areas is a reflection of this unusual jobs market we're in, where unemployment is low, but hiring is very low. We have jobs, but we're afraid to move because we're afraid we won't get another job if we do. So if home sales are going to reach that Goldilocks number, one of the criteria is that there needs to be more inventory in the north, and that will probably require an uptick in hiring. As of now, home sales remain limited by supply in those markets. More homes on the market would mean more sales can happen. So we're going to keep our eyes on those cities to learn about unit sales volume growth if inventory grows there. So stay tuned. We'll wrap today with the latest view of home prices. I've been sharing this weekly view of asking price per square foot as the clearest indicator of home price challenges across the country. The median price per square foot in the U.S. now is just over $208. That's down from last week, as is normal for the season. So it's also 1.4% lower than last year. Year-over-year declines are unusual, and it illustrates a leading indicator for future sales prices. Homes on the market now are priced below last year by this measure. So sales prices in the future will likely have similar trends. The blue line here is the 2025 curve. It shows that price pressures are stronger now than they've been in recent years. Supply is up for 3 years in a row. Homes take longer to sell. sellers are adjusting their expectations. So you can see that adjustment in the blue line here below last year's purple line. Not all of the pricing indicators are negative, not all. But the trend is similar. In most markets, home prices are flat or maybe negative compared to last year. And in those tight inventory markets in the Midwest and Northeast, where home prices are still up, even there the trend is compressing. So home prices in Chicago are 5% above last year at this time, but they started 2025 up 8%. So as of now, there are enough markets up to keep the national average sales prices in positive territory for the year. This view of price per square foot is one indication of a negative price trend that we should keep in mind for 2026. So to wrap up today, our outlook for 2026 includes slightly improving unit sales growth with basically flat prices. Home sales have been very low for 4 years, and this is the first chance to see meaningful growth from those low levels. I think the data points in that direction, but any gains are fragile, and that's why we watch the data every week. All right, happy holidays, everyone. We will see you again after the new year.